Good morning, ladies and gentlemen. Um, Today we're going to be talking about something totally different. We are not going to be looking at 2025, it's over. We're going to be looking at 2026. And actually, Christmas is 3 weeks away. And today is the 27th of November. Okay? So, three things I want to emphasize. One is that 2025 is gone, and 2026, 27 is what we are here to talk about. Two, the lady talked about forecast last year, 8 and 5. But the theme today is that forecasts don't matter, it's judgment that matters. Even if you give 5 people the same data, they'll come up with 5 different opinions. So let's be careful about that. It is not the forecast, not the model, it's what you do with it, the judgment that matters. 3 is that reform does not just mean policies. Reform means institutional reform, it means policy changes, it also means that market's response as well. So that's very important. So today we're going to be talking about Nigeria in the multidimensional global economy, critical indicators, structure of the economy, global trends and hotspots, and things that will shape Nigeria in 2026. The critical indicators, there are many, but we are taking only 5. One is stock market. And as I was approaching this place, I noticed that JP Morgan, I think, and they say the S&P is going to grow by a particular volume this year, the highest that we've seen all along. So let's start off. Stock market capitalization today is about 91 trillion naira. Our projection is that stock market capitalization is going to be 262 trillion naira. What is going to make the stock market capitalization move from 90 to 262? From about 20% of GDP to about 80% of GDP in this year, 2026. Please forget about, we are not in 2025, we are in 2026, so I'm assuming that everybody will survive to 2026. Okay. And 2027, we think that stock market capitalization is going to go to 393 trillion naira. And look at it at 590 trillion naira. This is a quantum leap. So, why? First item is Dangote refinery being listed. The Dangote refinery today is probably valued at about $32 billion. When you put the earnings, projected earnings from that onto what you have today, that adds more than 100 trillion naira, to market capitalization. So it will make up 72% of Nigeria's GDP. Also, we think NMPC is going to be quoted. So you have new listings, you have earnings, and you have efficiencies that are going to be driving corporate performance. Those are the 3 variables you're going to be looking at. Well, on the same hand, we say Nigeria's GDP is now $250 billion after rebasing. The aspiration is that Nigeria's GDP should be $1 trillion by 2030. Is that possible? We don't think so. But certain changes are going to drive the economic performance of this country. But if you look at stock market capitalization as a major one, a source of savings, a source of raising capital, and an indication of corporate earnings and performance, then this is something to be happy about. 2, we are going to be looking at interest rate outlook, medium term. So we have the medium term economic framework and the interest rate outlook. Interest rate cannot be divorced from inflation and money supply variables. Today, of course, the central bank 2 days ago surprised everybody by keeping interest rates static. And why did they do that? They did that because of, we keep on talking about inflation being the driver of interest rates. But when we talk about inflation, we always look at it historically, or it was this last year. But in economics, anticipated inflation is more important than historical inflation. So what do you expect, right? People are buying things because of fear that prices will rise, rather than because prices fell last month. So that is up. And 24 hours after the Nigerian decision, the Ghanaians dropped their interest rates by 350 basis points yesterday. So, like we said, the difference between Ghana and Nigeria is more than jollof rice or soccer, right? So, why did Ghana do this? Because Ghana has had interest rates dropped by 650 basis points this year, added to these 350 basis points. Two things matter. One, the Ghanaian economy is driven mainly, even though it's diversified, driven mainly by gold. What has happened to the price of gold? It's gone up, and people are anticipating it to $6,000. The Nigerian economy is driven by what? Oil. What's the anticipation of the price of oil? So, it's more than jollof rice. It's more like gold and oil. So, when we look at interest rates, we think interest rates will decline, but not as sharply as what we've seen in Ghana. But also, Ghana had defaulted. Ghana has a program. Ghana has gone through elections. So Ghana doesn't have the high political risk and to exogenous shocks as Nigeria. And the thing, don't forget, Ghana, 1st of March 1957, independence. Nigeria, 1st of October 1960. Ghana, first coup. So Nigeria followed with a coup. Guinea-Bissau, please. So, Ghana came back to democracy. Of course, Ghana had Rawlings, we had civil war. And Ghana went back to democracy, we came back to democracy. Ghana had opposition take over from party in power. We had opposition take over from party in power. So, Ghana seems to lead the way somehow. Okay? So, another thing is the inflation outlook. I just said it. Inflation outlook for 2026 is 12.7, and 2027 is 15.3, and it goes down again to 13.8 in 2028. Why? Money supply growth, which had dropped to 7%, is now up to 10.5%. But the target has been 15%. The price of petrol, PMS, today is 910, while the price of diesel is 1010. Our projection that the price of petrol will go down to 900. And if you use the exchange rate to do it, you find that Nigeria is still selling petrol at about 78 or 80 cents, while in Benin and others it's $1.30. Diesel we expect it to be at 1,000. The exchange rate target last year was 1,500. We think that in 2026, with some luck, we will be at 1,400, and we'll explain that in a minute. Food inflation targeted at 20%, because of insecurity and the bread basket, and core inflation at 20.05. That's the outlook, but again, the outlook is not as important as the judgment. What you do with this is what matters. CBN intervention, $250 million to support the FX market. The exchange rate is projected to appreciate and over around 1,450 to 1,500, even if the price of oil, and what we are hearing is that the price of oil could drop to $50 and maybe $45, and we need that as much as a bullet in our head. But the point is that because of our buffers, we may not suffer that much. So the volatility that will accompany that drop in price of oil may not be as bad as expected. But we have to tell you the truth. External reserves, gross external reserves, $45 billion. Again, don't look at external reserves in isolation. Look at it in the context of your debt. Because recently it went up, and oh wow, it went up? Yes, indeed. Why did it go up? Because we issued a Euro bond, we borrowed some money and put it into our account, and we said, so that's what happened. Another big idea is remittances. The British government just increased minimum wage, and also the British budget went through. I say this because diaspora remittances are key to the Nigerian economy, and therefore, if you have a minimum wage, if you have AI causing displacement effect in advanced economies, like what we say, last to be hired, first to be fired. That's the story of AI. So who are the last to be hired? The immigrants. Who are the first to be fired? Immigrants. So again, it means that you come back and make your economy work here. And we are beginning to see that return to Jakpakpada or whatever you call it. So, reduce pressure on the Naira because the Naira is in alignment with fair value, right? And one other variable we're looking at, total factor productivity, and this is very important. We talk about GDP growth, but the most important thing is potential GDP and real GDP. You see they are equal, and then the growth of capital stock, 5%, that is significant, and investor confidence profile increasing. These are the things that will drive long-term investment views. And when I say investors, I'm not talking about foreign investors. Investors have no nationality, they have no complexion, they have no religion. All they want is money. And it's significant that Warren Buffett wrote his last newsletter a few days ago. Warren Buffett is the best of all times, the Oracle of Omaha. And his rules are very simple. Do not lose money, rule number 1. Rule number 2, do not forget rule number 1. Right? So, okay. And it says when the tide is out is when we know those who are swimming naked. Okay. So, structure of the Nigerian economy. This is what the Nigerian economy looks like today. $250 billion. The most important variable here to us is net exports. That's $24.1 billion. If you play with the exchange rate efficiently, and that increases, it drives every other thing. Today, what we're doing, thanks to Taiwo and others, we are taking money from consumption and we are moving it to government. You see, government is $9.8 billion, but it's not the quantum of government expenditure, but it is the dominance of government expenditure which makes the economy to a large extent inefficient. The other one is $64 billion, which is investment. I just told you that Dangote's refinery alone is over $30 billion. So just imagine that. Add some more things there, and then you see gross capital formation, which goes back to what we talked about total factor productivity. So we think that with a growth of 4%, right, and we want to make this Y into $1 trillion. I don't care what, even if Einstein came to run Nigeria, you're not getting to $1 trillion, right? So, but you shoot for the moon, and even if you lose, you'll be one of the stars. So that's where we are. So these are the sectors that will drive this process. The creative sector, projected earnings, 7.23 trillion naira, and a lot more. There are hidden earnings there. Largest youthful population in Africa, Nigeria's digital creativity and expansion of the internet advertising. Technology and fintech. I was at Channels a week ago, and ahead of me, and I thought I had the biggest sponsor in Nigeria, and that was Dangote, who are sponsors. And they said, no, Channel said, no, sorry, we have a better sponsor than you, so they'll come before you. And I said, who is that? Say, Ope. I said, wow, what is it? How do you spell Ope? I said, so you will find out soon. If you don't know, you will know, right? So, and I said, Aliko is the richest man in Africa. I said, and so what? Ope is where it's happening, right? So that means that the digital bank, the regional bank, money center, money deposit bank, and all of that, it's all about what share you have of the wallet. We like manufacturing because manufacturing is the one that is more responsive to efficiencies than any other sector. So projected manufacturing, we are talking about 38.25 trillion, right? And real estate and construction, we like that because, again, it's a defensive sector, but also it's a sector that thrives on money laundering, right? And there's a lot of that in Nigeria. Okay, telcos are just that's a wonder kid. And telcos are linked to a large extent with fintechs, and projected earnings 41 trillion naira in 2026 of revenues. Agric and agro-processing, it's 104, employs a lot of people, but at the same time, it is the bastion of inefficiency. They respond to efficiencies in fertilizer, in seedlings, in processing, in storage. So those are the things that we like. So earnings for selected Nigerian companies. Q1 2026, revenues up 62% to 1.7 trillion. PAT up here 73% to 231 billion. So revenue diversification, we're talking about telcos, MTN. Revenue diversification, data, voice, SMS, digital, element of cost control. Again, if you go back 3 years ago, losses. What were the losses for MTN? Price of diesel, one. MTN was spending 250 billion naira, 250 million naira a day on diesel, 250 million naira a day. Base stations all over the place, forex translation losses. Fast forward, domesticated all the international debt, sold all the base stations away to IHS and American Towers. And what do you have? You had a lean, mean, and efficient machine. So all of a sudden, and then the federal government agreed for the review of tariffs. So it's a win-win story. It's akin to selling cocaine. So, and now, again, 5G, 4G, and connectivity. Connectivity. And the real condition for having efficient market is communication, easy access, homogeneous products, and the communication is the subject of your device, right? And the efficiency, broadband connectivity. This is good. So Q2, this is what we have seen. Q1 up 62%, Q2 up, projection is 69% to 2 point, and they've already done a 5 naira interim dividend. And so we are looking at it. And when you look at MTN Group, you find that Nigeria is the fulcrum rather than South Africa. So what do we think that someday somebody is going to come and acquire MTN, one of the big boys, Orange or somebody, who knows? But that's speculation. We like Dangote and the cement industry. This very interesting industry. One, revenues up, projection of revenues up 32% in Q1 and up 28% in Q2. Don't forget it's an election year. So in spite of everything, these guys make money whether there are elections or not. I used to be on the board of an alcohol company, and we say when people are sad, they drink. When they're happy, they drink. When they're happy, they drink, but when they're sad, they drink more to get over it. So whichever way you look at it, again, defensive. So clinker exports, but the key thing here is what happens to power supply. The biggest cost element for cement manufacturing is the furnaces. The furnaces depend on power. So if diesel price is coming down, if somebody is going to buy their power stations, what I think will happen is that they will sell all their power stations to the gencos, have a lot of cash, and use that cash to increase their margins and transfer that price. So 10,000 naira a bag of cement is ridiculous. It should be selling at 5,000 or something. So you can see that margin. So we like cement manufacturing because of power efficiency. We like that because it's going to the financial engineering and restructuring of this business and embedded power supply. Okay. Bank stability in 2026. Modest economic growth 3 to 4. Again, this is a sector that is consolidating and fragmenting at the same time. When you see those two things happening at the same time, it smacks of danger. Those are red signals. Sectors usually consolidate or fragment. Fragmenting because the margins are huge and everybody comes in before somebody gets killed. Consolidate because there's a shakeout. But when you see that and that happening at the same time, it means that industry is relatively becoming unattractive. And why? It's all about intensity of rivalry and bargaining power. The bargaining power of the banking system is getting weaker by the day. And then you have this Chinese who pay and Money Point. And if you look at advertisements, the peak flag program on channels is 10 o'clock news. And I would like you just to look at the adverts between 10 and 11. You are more likely to see Victor Osimhen and Money Point than you see, Bank X or Bank Y. You are more likely to see, so it tells you something. you're more likely to see Momo and MTN saying about how they've done everything in Nigeria and all that. It's not coincidental. Nothing happens by accident. It's because there's either money that's being made, money to be made, and more money to be made. So the banking sector is going through a change, which will make it more efficient, and usually changes take place. Again, the banking system had lived on rent, just like downstream petroleum, lived on rent extensively, from allocating to round tripping to all sorts of things. That's over. So it's now about efficiency, it's about cost to income ratios, and how to deliver value to the client. And the client has become very sophisticated and resistant to increases. So we leave that for now and go on to. So it depends on what kind of bank, digital bank, money center bank, and all of that. And are you BDC? And so the entire financial services industry. One part of the financial services industry that is quite interesting is the insurance business. Insurance, again, savings product, sensitive to interest rates and money supply and store of value and risk. So you have tier 1 banks, traditional, tech-savvy emerging banks, fintech disruptors, digital payment systems, and so on. But if you look at other markets, everybody makes money. It's not a zero-sum game. It only means that some make more than others. I think that's important to know when you talk about the banking space in 2026. So you have to look at where you are and where to exit, right? Next slide, please. Okay. So what's the capital market outlook? Equity outlook comes down, first goes up and then begins to come down as some sectors, because it's not a tide that will lift all boats, but some will do well because they're efficient, some will do well because they are well positioned, some will do well because they are well managed. We had a session yesterday with the insurance companies, and they have the new minimum capital. So we referred them to too big to fail. There are many big companies, well capitalized, poorly managed. In fact, the fall is always worse when you are a big failure than when you are a small failure, right? And may so rest in peace, Jimmy Cliff had a song, the bigger they had, the harder they fall or something, right? He just passed on a few days ago. So we are looking at these companies, value, insurance, oil and gas, banking, consumer goods, industrials, stable market, stable MPC rate, investor focus, and robust earnings. Investors here will be looking at treasury bill outlook. I don't want to take risk. Government debt is better than corporate debt. But we see that treasury bill rates in 2026 are going to be going lower, and bond outlook is also there. So we are in a declining interest rate environment, as it may be. Next slide, please. Pension performance. Here you can see the pension where it's growing. It's now 26 trillion naira in total value. We think it will go as high as 24 trillion naira, 30 trillion naira. Why? Because more people are going to be employed, more people are going to register RSs, tax collection is going to be much more efficient, and based on what we see, that makes it an interesting element. So, next slide, please. So, global investment outlook. And again, Nigeria is going to be very well interconnected with the rest of the globe. The spillover effect. Remember 1995 when there was a Southeast Asian crisis? Nobody in Nigeria even heard about it. It was of no interest. We were under a military government. As a matter of fact, as they were talking about that, we were executing Sarawiwa and all of that, and we had no time. Now, fast forward, the dot-com thing in 1999-2000, Nigeria really didn't care. But fast forward another 8 years, when the global crash, subprime mortgage happened, Nigeria suffered more than the global markets. Also, Nigeria has now become so interconnected that today we are the second greatest users of Bitcoin and stable coins and all of that. And but again, Warren Buffett said, I don't invest in what I don't understand, where there are no underlying values, and that Bitcoin is rat poison. So bullish, global banking and financial services, bullish, telecoms and digital infrastructure, strong growth, technology, fintech, high growth, oil and gas, stable. Again, don't forget, it could be 51, it could be 35. We don't know what's going to happen to the price of oil. But what was interesting, I noticed when you look at what Warren Buffett bought and what he trimmed, he accumulated a lot of Occidental petroleum stocks. What is it that Warren Buffett knows that we don't know? Occidental Petroleum is one of those forward-looking oil companies. They're the first to buy Iowa beef processors. As far back as 1975, they had identified Nigeria and in a joint venture of $100,000 capital, set up a hotel with the Lagos state government. So if they could have that forward view, Occidental Petroleum is not what you can ignore. So why is Warren Buffett, the Oracle of Omaha, buying Occidental Petroleum? There must be a reason. Nothing happens by accident. So oil and gas downstream, for us, globally, downstream is becoming efficient. Again, hub sector. The largest refinery in the world, Dangote is going in partnership with Honeywell to do this, and with 1.4 million barrels a day, bigger than Reliance in India. Consumer goods, always, you can't lose on that. At the end of the day, money, spending. Next slide, please. Okay. Sorry, go back. Real estate and construction. Again, working from home, a hybrid, and all of that had reduced the pressure, but Jamie Dimon now in JP Morgan should work from live. And what happened? We saw Canary Wharf assets value go through the roof. One statement, one investment. So, again, AI and the new hybrid, but some things never go back. Netflix is buying, maybe Warner Brothers. Netflix was a product of COVID, and now they're bigger than the guys. So, we're looking at that. Industrial and manufacturing, again, all about output. Global economic output is now about $110 trillion, right? Transport and logistics, you can't go wrong with that. And insurance, again, risk has to be covered. Healthcare and pharmaceuticals, longer lives, and we are seeing all sorts of things. Now, so this is the global investment outlook. And next slide, please. So, what assets to watch? We like gold. Well, somebody's talking about diamonds today, and diamonds are a woman's best friend, but there are synthetic diamonds, but there's no synthetic gold right now. Right? Equities, again, always saying that equities are going to fall off the roof. Well, for now, there's no alternative for that, but watch it. Because if anything happens, what happened to NVIDIA? Earnings, but you have to watch and hedge. Treasury bills, governments are becoming more responsible in spite of all the things that are happening. So treasury bill investment, is just in your diversification, it should be low. Then real estate, again, high population, where there's money laundering, where construction costs are coming down, real estate is good. Okay, next slide. So this, at the end of 2026, I started off by saying $250 billion, and you find here that most important one, 26.1 net exports. Why? As long as Cardoso is holding and resisting central bank dependency, resisting and fighting for central bank autonomy, all right, and ensuring that inflation targeting is the monetary policy framework, net exports will rise, and that is what's going to drive everything else. So you see, government has increased, consumer is flat, and investment is flat because they are waiting for the next election. Next slide, please. What could change our projections? All of these are good projections. But you know, Harold Wilson said 24 hours is a long time in politics, and Nobrini says that 1 week or 1 month is a long time in economics. All you need is somebody to say, oh, there's genocide, and then all of a sudden markets flip. But you know, you never say never. What could change our projections? Next slide. If the price of oil falls below 60, and it will fall, it changes everything. Every $1 drop in the price of oil leads to certain amount of vulnerability for the Naira and for the Nigerian economy. Heightened insecurity in the food basket states can lead to higher food inflation. And now you see me, now you don't. We don't know. Some people say they know who the bandits are. Talk to them, but we can't see them, right? So there will be heightened insecurity, whether you like it or not, because there's a correlation between heightened insecurity and political activity. In the Niger Delta, we know that very well. Increased election spending is so there's about 45 trillion naira of war chest money waiting to be unleashed, right? Either to buy PVCs or to induce what we call the inducement factor. But it has a negative effect because the absorptive capacity of this economy is not as rich as it is. So if you throw money into this economy, you actually get it becomes counterproductive. Global commodity prices decline sharply. Why? Whether we like it or not, Putin and Zelensky are going to, and Trump are going to agree on something. And that is what's driving the price of oil down. If this happens, most of the prices, you know, today, wheat, rare earth, and all these things are going to change. And that changes the equation completely. Inflation picture, employment picture. These are things that you have to worry about. Next slide. So, our domestic and external debt. You see your external debt is growing, and your domestic debt is flatlining. When interest rates come down, debt service, it's not the debt, the nominal debt that matters. It's the amount you are spending on servicing the debt. And if you are spending so much on servicing the debt, you have less to do things for food, health, and other things. So it's good to borrow, but you better know what you are borrowing for. But again, the instruments that are going to be issued, the way it's done efficiently, is what makes Parthian and asset managers and interbroker dealers, make them happy. They make money when there's more debt. They make more money when debt is being traded. Next slide. So, hotspots. This is what the economists did in the year ahead edition, which just came out a few days ago. Next slide, please. The world ahead in 2026. You can see what the guy is carrying. Tariffs, growth, valuations, debt, and inflation. Next. So, economic worries. So far, America's economy is proving more resilient than many. We exaggerated, but America is going into the lame duck, dead duck syndrome because midterm elections are this year. Remember, we said we are in 2026. So we're having that in November. China's opportunity. China is going to face a slowdown, but China has been very, very coy and very strategic. And you can see it all along. We do $28 billion worth of trade with China. We do $6 billion worth of trade with America. Right? But China has not told you about genocide and all that. China are doing everything. They're funding the Road and Belt Initiative. So we have to look out for that. Debt overhang, high debt to GDP ratios. That is the big. Before it was private companies, private banks that had the debt problem. Now it's the governments, and the governments have to do something. So the most efficient of the government areas is the European Union. AI, good but bad, right? Don't forget, one man now says he has his income is going to be $1 trillion, which is equal to all of Africa, right? So every revolution, from the Industrial Revolution, Agrarian Revolution, Digital Revolution, Technology Revolution, AI Revolution, has had the effect of increasing by multiples total output, but also has the effect of increasing the difference between the rich and the poor. And because the rich and the poor, that division, that is what makes Karl Marx said that built into capitalism is its own destruction. And that's why Engels said that in the final days, the governments of men will give way to the governments of minds. And it will be unto each according to his needs and from each according to his ability. So watch out for AI, displacement effect on employment. And you can see Warren Buffett has given out all of his money to charity. Bill Gates is doing the same. So they say the only two people that will benefit from the money that you accumulate are two people who don't deserve it. One, the government, and two, your children. So economic worries, negative effect, but some people are paid to worry and some people are paid to hedge against the worries. China's opportunity, we know where we are. We are what we have competition. Cooperate with China, compete with them, that's the American debt overhang. When interest rates are dropping, debt overhang is not too much. But when it turns around again, and if inflation turns around in America, it's a different thing. One thing I didn't mention is that in May this year, there'll be a new Federal Reserve chairman. It's quite clear that December 10, 11, more likely than not that there'll be no reduction in interest rates in the US. So the US money market, the Fed chair, the midterm elections means that we have to watch out for what's happening in the US. So I think basically at the end of the day, what will shape Nigeria in 2026 are the following. Elections, huge spending, debt service down by about 4%, savings of 500 billion, market cap up, Dangote and NNPC listing others, budget of 2026. At this time last year, the budget was based on $75 a barrel. It was based on 2 million barrels a day. It was based on inflation target of 15% and 1,500 naira to the dollar. We got it right with the exchange rate. We got it awfully wrong with the production. We got it awfully wrong with the price of oil. So if I'm to use the same basis and assumptions for the budget for 2026, which should be announced in the next week or two, generally speaking, the budget should be about 15 or 20% lower than what it was last year. But can you announce a budget of that nature in an election year that, oh, you're going to, nobody will buy that. So you got to do some things more interesting. You've got to play with mirrors, right? So that's budget. The price of oil will fall, and we are projecting 55, and somebody is projecting 35. Those are doomsday. Insecurity is part of our system. We come to live with it. It will affect us. Tax reform bills implementation, some of these items have to be deferred because they're not politically palatable. So our markets are, people are afraid. So Taiwo will calm nerves here, right? But some nerves are so afraid that you can't be calmed, right? Import duty on, 15% import duty on fuel. Again, this is the biggest struggle between national interests and special interests, right? 5 years, 10 years ago, nobody believed that any refinery will work in Nigeria. Nobody believed that there will be uniform pricing. Nobody believed that subsidies will stop. But all of this has changed, and that's a game changer. And again, there's going to be another price war. And in the price war, one man wins, consumer, and nobody, all others lose for now. So after the price war comes the real thing. So watch out for that in 2026. Next slide. So key factors that will shape Nigeria again. AI will affect us. Digital and social commerce. Economic growth to improve moderately. And inflation to remain a challenge. Thank you very much, ladies and gentlemen.